Hi, this is Roger Conrad. I'm the editor of Canadian Edge newsletter. And what I want to talk about today are a new phenomenon called cutless conversions. Now, since the trust tax was announced on Halloween 2006, there's been a perception that all trusts, when they convert to corporations in the year 2011, would have to then reduce dividends, usually on the order of about 31%, which was the top rate assessed on trusts. And that supposition pretty much rippled all the way through all the trusts. And you saw, of course, the tremendous declines in November, from which many of the trusts, in fact, most of the trusts, have yet to recover from. Since that time, in the early months following that announcement, we saw a number of takeovers of trusts. Most of these were at pretty good prices. And so those more or less went away with the credit crunch and the bear market that followed. But so you started to see companies and trusts begin to have to articulate what they were going to do after 2011. So a number of them converted to corporations and cut their dividends fairly severely. But a number of other trusts told us at the time that they were considering converting, but keeping their dividends the same. And now we're starting to see the fruition of that, something that I call no-cut conversions. And basically, what this means is that these trusts, because they're strong, because they value their income investor base, have elected to maintain their current distributions, even though converting early to corporations. So far, we've seen 7 individual companies do this. 3 are in the Canadian Edge portfolios. Ag Growth is one. They've already completed their conversion. We saw, and then last week we saw Great Lakes Hydro and Colabor Income Fund both announce cutless conversions. So I think we're going to see a lot more of these going forward. I think as we see more of them, we're going to see that more or less that cloud that's been hanging over the trust more or less blow away. Obviously, there's still some rough sledding ahead for many of these trusts regarding the economy, the energy producers, of course, natural gas prices being low where they are. But the whole specter of 2011 is gradually being rolled back here. And I think we'll have quite dramatic and positive results for the converting trust. Now, of course, there's always the possibility we'll see a change in Ottawa regarding policy. We'll see the trusts be restored and be able to remain trust after 2011. But basically, now what we're seeing with these cutless conversions is that as long as investors are holding good trust, are holding trusts that own good businesses, 2011 is really not the big deal that a lot of people thought it might be. So again, very big positive sign in a market that things are somewhat unusual, and we're going to continue following this trend, and in fact looking forward to a major article in Canadian Edge in the near future. So thanks for tuning in today, and I'll look forward to chatting with you next time.